Welcome, it's Brandon Chapman with you. It's a Theo Night video for TheoTrade. It's February 14th, 2022. And boy, you think about the Valentine's Day that we're celebrating today. No love for the markets, as we think about potential hawkish policy, both from the Federal Reserve and from the federal government with regards to Ukraine. A lot of bluster. I don't know, like what's going on there? What's going to happen? Of course, as we look at the markets, the S&P was down about 1/3% today. But all this talk and stuff that's going on right now is benefiting the shiny stuff, gold especially, as we think about what's going on. The time of year. We got Valentine's Day. We're definitely getting the gift of gold right now for this holiday for Valentine's Day. Gold up 0.5% today. We're going to take a closer look at GDX and some of the activity that's gone on there that's very bullish and has a positive outlook. And so anyway, this direction will kind of take things for today's session. Anyway, let me bring up the S&P 100 here, and it just give us kind of a sense of what's performing. Now, as you look at across the S&P 500 sectors, cyclicals perform the best, up 0.5%. Communications basically flat along with technology. The worst performers down here at the bottom, of course, were energy and financials. As the economic outlook's diminishing, yet the Atlanta Fed, we're looking at something just north of 0%, 0.1% GDP growth projected for the first quarter. We get this kind of sluggish growth outlook. Meanwhile, the Fed met today, and I don't think really anything happened, didn't push anything. There was this kind of talk, okay, is there going to be a surprise rate increase? No, it didn't happen. But the realities of what's going on in the interest rate markets are rather significant, as the potential Fed policy error is really beginning to get priced in right now. We look at ZQ, you'll notice for the March expiration, this shift up in this line, pricing in a lesser probability of a 50 basis point increase in a Fed meeting about 30 days from now. Again, maybe using some of the emergency rate increase news. And so what you're seeing right now is this line is kind of, flattening out a little bit here and kind of, generally speaking, kind of accelerating down here as we kind of shift to, generally flattening across the way, right? As these going out to July 23, it's maybe they're pricing less of a rate increase here. So small little shifts up. The most important, obviously, is for March. The potential of a 50 basis point increase is now diminished a fair bit from just last week. So as we think about, going forward here, what is doing well? On a sector basis, we see that XLY may be finding a little support here. When you put that in the perspective of the broader market, right? We potentially maybe a higher low going on. The outlook seems pretty clear. We talked about last week, 4,600 being rather significant. We faltered at that level. We pulled back towards the end of last week. And today we're just kind of hanging on. As you look at the VIX did march higher to about 32 before fading back. As you look at the term structure of the VIX, VIX3M plus VIX, and we bring this yellow pairs ratio line here, what you'll see is the 3-month VIX is about 3% higher than the spot VIX, which is VIX. If we look at the VIX term structure /VX, what you're seeing is that we are in a backwardation term structure, this red line here, meaning what? The market's pricing in lower volatility in the future. That's a kind of a first step to be able to find a bottom. As we look at the VX right now, you got 27 handle, you got a 27.5 handle here, 27.25. Well, you compare that against the VIX right now at around 28. Again, the VIX futures are trading at a discount to the spot VIX. All of that stuff does point to the potential of a near-term bounce in the broader market. But what does that necessarily bring with all the stuff in the background in terms of the Fed raising rates, although they're still buying bonds until the end of the month, and all the talk in with regards to Ukraine and the potential conflict with Russia there? It seems like we kind of throw it out, oh, it's imminent, and yet we walk it back. The algos are having a really hard time kind of, trying to create, trade it, down, and then we're up again. Where are we going tomorrow? Expect to see the continued headwinds out there really pushing prices and creating a scenario where energy is like up one day and now we're down. What is happening here with the outlook for energy demand? You'd think that if we're going to a conflict With Russia and Ukraine, that should be positive for oil prices. If we look at forward/CL, CL was modestly higher today. Well, 2%, I guess, isn't modest, but oil stocks or energy stocks generally lagged. If we look at Exxon, for example, it was down, although it did recover off of the lows. As you look at some of the top performing names, Tesla, UNP, Netflix, NVIDIA, a lot of, technology in here. We got transportation. We've got MasterCard in the mix, Phil Morris, just a hodgepodge of various names, like a Nike, and again, a lot of stocks that maybe got hit on Friday, maybe searching for a bottom here, or a stock like Disney that gapped up on Thursday, dropped on Friday. Now we're just kind of holding on. So as you look at these moves, it looks like maybe some near-term supports coming in, but not honestly providing a major kind of breakout to the upside with many of these names. However, one area that is breaking out is gold. So for example, GLD, it's moved today. It's now the highest close we've seen going back to, I believe, June 11th. I got a blog post as well on this and some of the significant activity that's gone on. And as you look at the trade tab, when you look at specifically not GLD, but GDX, this is Gold Miners ETF. Some huge trades in here today, 50,000 contracts, June 42.45, Sep 50.45, 45.50 here as well. What you're seeing is some upside call spreads for 20-something cents here for June, upwards of 45, and then you got that September timeframe pushing at 45 to 50, costed about 35 cents on a 5-point spread. So you think about that, man, risk 35 cents for the possibility of GDX going to 50. It's a very nice reward to risk. And this is kind of happening as since January 3rd, we've seen some significant trade in GLD, in SLV, looking for substantial upside. And so we got this backdrop of the Fed potentially raising rates, engaging in hawkish policy that doesn't necessarily bode well, generally speaking, for gold, for example. A stronger dollar generally comes. But the issue is we're looking at what if the market does correct here in the next couple months and we start seeing a major pullback and the Fed has to step in big time again because of the policy error. What does that bode well? So again, you think about the prospects there, the possibility of inflation created by war, government spending, defense spending, etc. And you start to build this scenario where it may not be the most likely scenario that GDX is going to 50 by September. But if it does, it's a very, very cheap way to hedge against a scenario kind of playing out that way. So near-term bullish movement in gold and gold stocks. Another precious metal stock, silver, is another one up 1% today. Hecla Mining had some good option activity last week, bullish option activity. Kind of like this thing getting back to prior highs in the near term. So again, we're seeing this drive towards precious metals as gold is breaking out. As we look at Bitcoin /BTC, not so lucky, although they had its breakout already back on the 4th and 5th, 7th. We're seeing it maybe find some support here around that 40,000 mark. So look for Bitcoin maybe to see a little bit of movement here with the drumbeat by the hawks with the federal government and with all the news of Russia. Again, eventually maybe the Fed misstep. Does that again lead to a big move in Bitcoin? Of course, Bitcoin at 40,000, bigger picture, longer term, probably undervalued here. But there's been a lot of speculation that's kind of come out of this product for the most part. All right. So you get kind of the picture here, right? Markets kind of maybe finding some support here. Gold's breaking out. That may likely continue. Now, if you look at UP, the dollar is also rising. So we see gold rising, the dollar index rising, in this case, the dollar index ETF. All this does show is that the dollar is strengthening vis-a-vis the euro and other major currencies. It's weakening in real terms. That's why GLD is declining. Again, if you're expecting a bounce in the market, don't expect a lot, as 4,600's provided substantial resistance for the SPX. As we look at the Qs here, again, maybe we find support, retest 366. Could a stock like AMD kind of lead the way there? Maybe. Netflix, so these are some stocks that have kind of led out today. Could Netflix run and retest its prior high? Sure. These might be some names, some of these stocks that are up that if we catch a bounce today, may lead things out. Of course, Philip Morris has been on a continued tear as a lot of that defensive rotation has gone towards tobacco stocks and not as much in the periphery of the staples space or staples sector. But again, what you'll see is a number of different technology companies that may kind of lead out for the next couple of days if the market does bounce. But again, energy may kind of shape up here. As you look at forward/NG, natural gas stocks caught a bid today. Some big activity last week on Friday in UNG. So again, in the commodity space, natural gas may be a potentially better near-term play than oil, but the oil dynamics as we go to the product depth here forward/CL are still very, very positive. In fact, if we look at the difference here between the 10th of February to today, what you're seeing is a steepening of that curve for oil futures, which again just shows the risks right now in oils to the upside. But what you did see today is that energy did not participate, although it did have a very good day last week, XLE, for example, on Friday, and it just basically gave that back, or most all of it back from Thursday's close today. So again, not as necessarily bearish, but again, look for that continued upside potential here in oil, natural gas in the near term here, particularly if we get a cold spell. And again, we're talking about gold and gold stocks. Anyway, folks, it's been a pleasure being with you today. And anyway, we'll catch you back next week on my Monday TheoTrade video. Have a good one. Thank you.